Are you trapped in the same destructive cycles? Be honest, aren't you? You just liquidated another position prematurely. The setup was textbook. Your analysis was flawless. Your execution was sharp. But the second price retraced a mere 0.3%. Your hand gravitated toward the exit button as if possessed by an external force. Now you are forced to watch that same asset surge toward your predicted target, leaving you behind at the starting line. Here is the bitter reality. This isn't an isolated incident. It's not even the 10th time it's happened. It is a chronic loop you cannot seem to sever, and deep down you confront the truth. The market isn't obstructing your success. You are. This is self-sabotage. It is an internal virus that bankrupts more traders than any flawed strategy ever could. By the end of this discussion, you will possess the psychological tools to dismantle this. What most practitioners fail to grasp is this: 90% of trading failure is entirely unrelated to technical skill. A University of California study tracking 66,000 retail accounts revealed a staggering truth. The failing traders weren't utilizing inferior strategies. They weren't lacking in education. They weren't misinterpreting the charts. They were sabotaging themselves, strangling winners, nurturing losers, overtrading in moments of arrogance, and freezing in moments of fear. Does this resonate? If you have ever audited your journal and asked, "Why do I keep inflicting this upon myself?" understand that you are not alone. The difference between you and the 95% who surrender is that you are still here, still seeking the answer. You are finally ready to dissect what is actually occurring inside your mind during these moments of self-destruction. Once you diagnose the pathology, you can begin the cure. The mirror effect. Your performance is a direct reflection of your internal state. Let's address an uncomfortable reality. When you exited that winning trade too early, what was your genuine fear? Was it the financial loss, or the ego-shattering possibility of being proven wrong? When you clung to that losing trade until it decimated your capital, what were you truly anticipating? A recovery, or simply avoiding the admission of a mistake? The market does more than test your strategy. It strips away your mask and reveals your psyche. Every position you take is a reflection, and the image staring back isn't always pleasant. Research from MIT has illuminated a fascinating truth about the brain of a trader. When participants were forced to hold losing positions, their neurological activity mirrored that of a physical threat. Heart rates accelerated. Cortisol flooded their systems, a full fight-or-flight activation. Your biology interprets a red trade the same way it interprets an apex predator. This isn't a character flaw. It is an evolutionary defense mechanism. However, here is where the elite separate themselves from the crowd. Successful traders don't eradicate fear. They contextualize it. They recognize the pattern. They understand that the urge to flee isn't a protection of capital. It is a protection of a wounded ego. As one veteran remarked, "I realized I was exiting trades the same way I avoided conflict as a child. I retreated the moment discomfort arrived." Examine your last 5 losses. How many were genuinely bad strategies? And how many were solid setups that you mismanaged because you couldn't tolerate emotional tension? The market isn't your rival. It is your mirror. It will keep repeating the same lesson until you evolve to learn it. Stop resisting. If you continue to ignore these signals, the cycle will remain unbroken. The paradox of control. Why the harder you pull, the more you fail. It sounds counterintuitive, but the more you attempt to dominate your trades, the more you sabotage them. Traders often mistake discipline for sheer force, trying to suppress emotions or white-knuckle through the pain. Yet, research indicates this approach only guarantees a more violent emotional explosion later. Psychologists call this ironic process theory. The more you suppress a thought, the more dominant it becomes. Try not to think of a white elephant, and it immediately occupies your mind. The same applies here. Don't overtrade. And after 3 losses, your suppressed impulses take the wheel and you overtrade. You must stop making this a war of willpower. It is self-defeating. Elite trading firms understood this long ago. They don't train traders to kill their emotions, they train them to observe them. Suppression is friction, observation is awareness. When you resist an emotion, you feed it. When you observe it objectively, you neutralize it. A trader at SMB Capital noted, "I stopped trying to hide my fear. I started acknowledging its presence. That tiny shift changed my world." By noticing the fear, you create a buffer, a space between the stimulus and your reaction. In that space, conscious choice is born, and in that space, self-sabotage dies. The winning streak trap. Success is the precursor to ruin. The most treacherous moment in your career isn't after a drawdown, it's immediately after a major victory. The University of Chicago found that traders are 34% more likely to take reckless, oversized risks following a winning streak. Why? Because profit feels like validation. It tricks you into believing you have mastered the market. Dopamine floods your brain, whispering a lethal lie, you are invincible. That is when you inflate your risk. That is when you take the mediocre setup you would have ignored yesterday. You abandon your rules because this time is different. The second you feel complacent is the second you must walk away from the screen. John Coates, a neuroscientist and former trader, discovered that winning traders have elevated testosterone. While that sounds positive, high testosterone drastically increases risk-taking behavior. It makes you play as if you are using house money. One trader summarized it. "My best days were the architects of my worst days. I'd win big, feel godlike, then incinerate it all the next morning on a revenge trade. The market doesn't punish you for losing. It punishes you for the arrogance of believing you've won." Shift your perspective. Become skeptical of your own confidence after a win. The version of you that exists after 3 profitable days is the version most likely to destroy your progress. As your wins accumulate, your vigilance must increase, not decrease. If you feel the onset of complacency, know that a catastrophe is lurking just around the corner. The phantom pattern, when your edge becomes your enemy. You develop a system, you backtest it. It works flawlessly for weeks, then suddenly it begins to fail. You panic. You manipulate the indicators. You switch time frames. You lose yourself in a maze of your own making. But here is the reality. Your strategy didn't fail. Your conviction did. Markets are dynamic. They trend. They range. They explode with volatility and they go stagnant. A system optimized for a trend will naturally struggle into consolidation. That isn't failure. It's the nature of the game. Most traders, stagnant, cannot endure this variance, so they sabotage their edge by constantly fixing it. The elite minority remains tethered to the plan even when the plan is temporarily out of sync. Professional traders don't ask, "Why isn't this working?" They ask, "Is my strategy currently suited for this environment?" The legends in new market wizards often had losing quarters, yet they never abandoned their core edge. They downsized, observed, and waited for the environment to shift back in their favor. One trader said, "I used to treat my strategy like a magic spell. When it didn't work, I thought the spell was broken. But strategies are just tools, and tools only work in the right context. Stop the endless hunt for the perfect system. Start mastering the one you already have." Self-sabotage is often disguised as the search for something better. The loss aversion trap, why we strangle winners and nurse losers. This is the most universal form of self-sabotage. You know it's wrong, yet you repeat it. Your brain is hardwired for survival, not for maximizing a P and L. Daniel Kahneman's Nobel research on loss aversion proved that humans feel the agony of loss twice as intensely as the joy of gain. Losing $1,000 hurts more than winning $1,000 feels good. This creates a lethal psychological anchor. When a winner pulls back, your brain screams, "Secure the profit before it vanishes." When a loser moves further against you, your brain whispers, "Hold on, surely it must bounce back." This isn't a personal failing. It is evolutionary programming. Your ancestors survived by avoiding loss, not by taking calculated risks. But in this arena, those survival instincts are your executioner. One pro trader shared, "I stopped fighting loss aversion, I started calling it out. Every time I wanted to close a winner early, I'd say, that's just my lizard brain talking." That awareness gave me the power to wait. Your emotions are data points, not instructions. Fear indicates vulnerability. Greed indicates overconfidence. Frustration indicates attachment. Winning traders aren't robots. They are hyper-aware humans who have learned to translate emotional noise into logical action. The perfectionism disease. When high standards become an anchor, you wait for the flawless setup. You overanalyze every candle. You demand 5-tier confirmation. And the move leaves without you. Again, perfectionism sounds like discipline, but in this game it is usually just cowardice masquerading as standards. The truth? There is no perfect trade. There is only probability. While you are paralyzed waiting for certainty, the professionals are taking 60% probability setups with disciplined risk. Perfectionist traders consistently underperform. They suffer from analysis paralysis. The fear of being wrong makes you incapable of being right. You hesitate, you miss the move, and that regret fuels the mistakes on your next trade. One trader confessed, "I wasn't being disciplined, I was hiding. I sought the perfect setup to avoid the discomfort of actually being in the market." The antidote: good enough is the standard. Elite traders take 3-star setups with 5-star risk management. They know that wealth is built on consistency, not a single perfect strike. Are you being selective, or are you just afraid? Selective traders execute when their criteria are met. Scared traders move the goalposts the moment an opportunity presents itself. The comparison poison, trading through the eyes of others. You see a 200% gain posted on social media, and suddenly your consistent 5% feels like a failure. You start chasing home runs. You increase your risk. You blow your account trying to match a highlight reel. Social media is a curated illusion. People post their trophies, never their graveyard. Your brain adopts a false baseline, believing that anything less than spectacular is a loss. But the market wizards proved that there is no universal path to millions. Some scalp for pennies, some hold for months. There's only your path. One pro noted, "I wasted 2 years trying to trade like my mentor and lost money every month. The moment I started trading like myself, I became profitable." Stop measuring your worth against someone else's filtered P and L. Measure yourself against your process. Did you follow your rules? Did you manage risk? That is the only scoreboard that matters. Once you make this shift, you stop sabotaging your own progress to chase someone else's shadow. The revenge trading death spiral. When pain becomes your strategy. You hit a loss, it hurts, you take another. Now you're agitated. A third loss hits, and something inside you snaps. The prefrontal cortex, your rational brain, shuts down. Your amygdala, the fear center, takes command. You aren't trading a plan anymore. You are trading your pain. You size up. You take garbage setups. You try to force the market to give back what it stole. This is the fastest way to turn a minor setback into a terminal disaster. Neuroscience confirms that consecutive losses literally make you less intelligent and more impulsive. I lost $3,000 on 3 trades, then revenge traded myself into a $15,000 hole, one trader admitted. The market didn't do that. I did. The solution is a circuit breaker, a mandatory rule. 2 losses in a row and you are done. You walk away, you reset. The version of you that exists after 2 losses is not fit to manage capital. You are no longer a trader, you are a victim. And victims get slaughtered. The isolation trap, the poison of silence. You fail again, you feel the shame. You hide it because admitting it feels like admitting defeat. You convince yourself you're the only one struggling. But every legend, every wizard, has felt like a fraud. Every one of them has considered quitting. The difference is they broke the silence. They found mentors. They joined communities. They stopped pretending. They realized that vulnerability is a prerequisite for growth. Self-sabotage thrives in the dark. When you isolate, your brain invents stories about how you are uniquely broken. The moment you share the struggle, those stories lose their power. You realize you aren't broken, you're just learning. Find your community. Don't fight these demons alone. The identity shift from saboteur to sovereign. Self-sabotage isn't a random glitch. It's a role you have accepted. But roles can be rewritten. Identities can be forged. Professional traders don't try to be disciplined. They are disciplined. It is part of who they are. I used to be a guy who cut winners. Now I am a guy who rides them. First, name your pattern. I exit early because I'm afraid of losing my small gain. Second, understand the why. I'm protecting my ego from the pain of being wrong. Third, decide who you are becoming. I am a trader who trusts the math and lets the edge play out. Act from that new identity, one trade at a time. You don't rise to the level of your goals. You fall to the level of your systems and your identity. The market knows who you are. It will reward your growth or punish your stagnation. Your next trade isn't about the money. It's a vote for the person you're becoming. You've seen the anatomy of the trap. Awareness is the first step, but action is the only cure. Think of the last trade you sabotaged. What was the pattern? Name it. Own it. Strip it of its power. The market isn't stopping you. You are. But the moment you realize that, the power shifts back to you. Make your next trade a decision about your identity, not just a ticker symbol. I'll see you in the next one.